Q1, what should people be putting their money into?
Frank, thanks. It's great to see you again. Really great to be on the show. Yeah, I think, Q1, what we're looking at is, as you talked about, we had a strong year despite what we had all going on this year. We had a strong year, about 15% rally. I think investors had a lot of help with monetary and fiscal policy. And I think a lot of that good news has been baked in. So I would be cautious as we go into Q1 and Q2. There may be some sort of correction as I'm possibly seeing and what I'm looking at through my thesis, my analysis. But I think investors shouldn't worry. I think we'll still have a strong year despite that. And we'll have I'm looking at an upside around 10% is what I'm looking at currently. But I think investors really need to, look at a situation where they have cash in the sidelines. They can be prepared for any sort of correction and be into those themes that we liked in 2020. I think those themes still play in 2021.
All right. I mean, it all sounds logical to me. So I think the real question here is tech's obviously going to continue to be strong, or we think it's going to be strong. What sectors with a vaccine stimulus do you see kind of rising? We saw financials and energy have a really good Q4 after a pretty tough year. Do you see those trends continuing? And should investors like the people that you represent, should they put their money in there?
Yeah, I think, that's a great question. And for my clients, we still stayed heavier on the side of growth and tech, but you have to hedge with the reopening plays. So I have hedged with the reopening plays if you're looking at certain retailers or maybe certain financial institutions, but I really like more the digital wallet plays when it comes to that. But I think the reopening plays will rebound, right? So the airlines, all those reopenings, travel, they will rebound. When and what for investors, it's really looking at your time frame and your horizon. Some investors may not be able to stick out the growing pains of what's going to happen for the next, call it a year or so, especially for the reopening plays. But if you have a longer horizon, investors can take the opportunity to invest in some of those opportunities that are going to rebound with the vaccine and with more good news.
All right, you're always kind enough to send a few notes. We saw some notes on fintech companies. We're seeing PayPal and Square. That's an area of tech that we don't talk about as much when we talk about tech, when we're talking about Zoom and other companies. What's your thought on those as we see people kind of going back potentially to stores where they may be less likely to use fintech, but also when you look at the valuations of companies like Square and PayPal, Square alone, I'm looking at is trading at over 200 times forward earnings. So what do you think about that?
Yeah, there's stretched valuations. And I think what you're seeing is, the valuations hopefully will catch up to the possible and potential network effect when you're talking about these fintech payment solutions. So I still like them, and I really like them, especially if you're thinking longer term. There's still a lot more growth opportunity, especially when you're talking about Square and PayPal and the network effect. They're tying in cryptocurrency. You're seeing things that Cash App and Square, they're doing. So there's still much more growth and more adoption available. And I think investors, if you're thinking longer term, you still have opportunities to, with the stretch valuations, to actually buy opportunities that may be lower now. And in the future, we'll see, where they kind of land, down the line.
Shepard Smith here. Thanks for watching CNBC on YouTube.